Uh, so we'll start with a confusion state which is prevailing in market, and most of investors and traders, they're panicking on whether Nifty will bounce or it may crash and break 10,000 and make new lows. Uh, if you remember, the previous lows were 9915 and 9950. Somewhat, that was a good base. And this time, since this is a structural change and a lot of companies are not performing in terms of results, and FIs are pulling out money from the market. So what went so wrong in this last 1 month is a crazy thought, and uh, all people are just scratching their minds. Most of them are stuck in their portfolios; they couldn't sell. Uh, Probably the euphoria of budget and expectation of people from the government, could not hit as per expectation. So the selling spree is on from FI desk, and DIs are just trying to save their NAVs whatsoever they've invested in, and it's a kind of bull and bear fight, but still FIs are good in tune to switch Nifty down from 12,000 to 11,000 levels. So the confused state of mind, but for me, I think many things are clear at this point, and I personally believe that market should continue down. Maybe this is a period of consolidation, and since last 5 years, I think market has performed well, and Nifty was standing at 6,700. I remember when last time BJP won the seat, and since then we rallied up to 12,000, 12,100 odd levels. It's a good makeup in terms of return, uh, but people who have invested in mid caps and small caps, they are really stuck because since 2018 January post taxation, market is correcting. Mid caps and small caps are largely 60% down from the top, and companies which are even performing, they're also not performing to the you know to the return which people have expected. So I feel the undertone at current situation is weak, and there is really a lack of liquidity when we've seen that PSU banks were hit with large portions of NPA, and followed by the crisis of NBFCs, which have been supporting in absence of bank. So once the banks were out of PSU banks were out from the supporting system to cooperate, NBFCs were taking the role, and they were performing, and they were capturing the market share of PSUs. And the structure got hit when NBFCs were out, and uh, the system really faced the liquidity issues, and that's where the corporates were hit on the funding part, and they were not able to cope up with the working capital which is required for the businesses. And gradually, there was a slowdown started in the economy, and the first was the bank, and then the consumption basket. So auto was the first one because it is not the basic necessity. People would certainly like to cut their un wanted expenses. So probably you can really control on your expenditure on your leisure life. So probably this is the one. And then gradually you can see that the consumption basket is now hitting, and there's a slowdown in results too. A lot of companies are facing challenging environment in margins, volumes. So probably the PAT margins are hit, and uh, probably the volumes are down. So the sector is overall, everything is hit. Steel is also hit due to auto. So it's all combined nature, and I think it's a good part when we say that the consolidation is happening. There's a lot of cleanup is happening from the system, and this will certainly, at some point, mm, at some point it will stage, and it will really pull back. But I think this time is really a time of waiting down and just wait for a consolidation to make a proper base and then reverse back. So I think it will take some time. So probably 6 months, 8 months, 1 year. I don't know, but I think every country, in fact, if we talk about US, we talk about China, it's a global slowdown. And when Trump can tweet anytime on China, things seems as if everybody is fighting to save their own country. So the, um, since we are chartists, we think more on the lines what markets are doing, and we really try to follow the market players, and we don't want to predict on what is expected out of long term. But yes, as far as our side can see, I think technicals are giving a different picture, and all countries, when we really need the FDI or FPI power in you know our country to support the basket or the funding thing, keep the things rolling. I think everybody is standing very weak, and the economies are going forward. Maybe try to become a closed economy, wherein trading or exporting things is not so easy. And since Indian structure is more on a debt structure, and even our GDP, when we talk about GDP, there are a lot of issues in terms of calculation. People talk about, a lot of analysts support that it is in fact rated 2.5% higher. So probably there's some calculation issues. So the idea is that people, the real growth is real growth or not, it's a point to understand. And the environment is changing. A lot of businesses are getting shut, and a lot of people are losing job. So I think the current structure might take some time. There is no avatar at this point standing that he puts in some lakhs of crores of rupees to support the system. It's all about debt again, and we are already being in India as a country, we already have debt, World Bank, IMF. So probably I think the dependency is now more on foreign money. So government may try to open up that. That is the one part. And once the cleaning of system is on, I don't know. It is a cleaning of system, or it was a system being built since last so many years, 20, 25, or 30 years, that we are so dependent upon the old structure. The debt was easily arranged and things were moving up quite nicely. And we've seen the performances of all the debt-ridden companies and where they're standing at current. So I think it's a evolutionary stage wherein the old businesses which are not in demand, they are out. We have a good example of Vodafone Idea. I mean, the winner is the whosoever is holding amount and who can actually has some backup on to fight the competition. So I think Vodafone and Idea is a total hit. Now Bharti Airtel and Reliance is there. So probably it's all about eating the market share when the real growth, the consumption basket gets low. So it's all about eating the competition. So that is the first mark, and how and which sectors are going to really perform next. I think this is a point to think on, and we all know that the autos are facing a real big problem, and since we say EV vehicles, so probably I think new sectors, new companies will come up, new cycle will really take this economy on upscale. So currently, I think a lot of issues are there, and it is not something that it will change all of a sudden. But yes, these issues, I can say that since Modi came in power last 5 years, they just try to win the vote of country. And since last 2 years, since slowdown was really happening since January 2018, the elections were expected, and I was currently see, I'm not too shocked, because I think if you check on to the previous webinars, I was talking about sub 10,000 odd levels. I've given previous target of 9,600. it is all because I really, I was really copying what charts were telling me, and I was writing it down, and I knew something was really very fishy. So NPA was a bigger issue. ILFS was a very bigger issue. It is not so small that so much big, organizations working from so many years gets default. So something which was, undigestible, and now it is, the system is vomiting all those negativities. And since the government is already in, so there is no political pressure of, gaining the vote share to Congress, or, So I think now is it's a cooling off period, and government will really not, like look over that how markets are performing or whether it is going up or down. They're not really thinking over it. So what they want is survival of the fittest, and all those companies which are healthy and good on corporate governance part, and uh, those who are on, a good taxation books or clean books, you can say, they will perform. And not important whether they will perform or not. It is important whether the sector is in demand or not. So at this point, I think it is more about choosing the best sector which is in demand. I think pharma, if improves, there are few companies which will perform well. So probably if not well, pharma is already corrected. So I think at this current environment, the consumption basket is the best to put in, and then choosing a best from these consumption basket is again one point which we need to think. So a lot of issues will remain. We have seen Jet Airways, we have seen SpiceJet 2. So I think uh, we have seen Indigo too. So this sector again, I think Indigo is good to go. If it calms down, it is a good to play on a cyclic thought. So I think the performers will stay. So you need to choose the best companies out of total lot, and try to, bottom on these stocks whenever market corrects, and just stay away from the sectors which are dependent upon other sectors. So probably steel is dependent upon auto, or maybe growth, or, everything. So it's all about cyclic. So I think at standing at this situation, I would say that don't go for companies which are trading on much on higher multiples. So probably we have Asian Paints to 1500, standing at multiple of what, 50 plus, probably. I think not advisable. So let the market correct, and mid caps are really at an attractive valuation. But if you see, mid caps have corrected before election. Even mid caps have already corrected to 50-60%, and people were just trying to bottom and average all those mid caps. And now the mid caps are just hitting the stop losses of people. So maybe another 10-15% mid caps will bottom, and they will stay there for a while. So probably 1 year, 8 months, 6 months, you can't say, but this will be a time of bottom structuring which will happen. And then once the selling part is done and things cool down, so probably US election goes on, Trump is in or out. A lot of market sentiments are there, right? So let's see 2020 as a consolidation, 1920 as a consolidation, and just try to pick good companies, right? Uh, Companies which will always stay in demand, and that is the point. And if you say that you have corrected and you want to put in fresh money, so I won't recommend at this point. So let the market make its own bottom, and then is what, we'll see how things will pan out. At the same time, if I say something which is very contrary, is action in gold, right? So the charts are amazing. When I speak on gold, I'll show you. So I've already shared this before, and if you all remember, I don't know, last webinar when we had, so it was inverted head and shoulder, and this was the last buy I've given at $1265. We are currently standing at $1440. So it's a very strong breakout, a healthy breakout in gold, and the first target stands out to be, 1520 to 5040 zone, and you won't believe if I say that this gold can even touch $1,900. So it is huge rally if it is going to happen. It's a strong breakout, and every time when I check screen, I find supports on all support lines and all averages, major moving averages. So there is something which is hidden, and there is one good buyer who is actually bulling this gold. So at this point, when we say this gold has potential to move up to 1540 and then 1900, it is the picture is quite big, and you will certainly say that, if markets are not performing, or if markets are going to collapse, or there is some big problem with the thing, then only gold moves up. So yeah, you are right. And then if we say, if we check international markets one by one, say, if we check Dow Jones, so Dow Jones made the same structure, right? So it has again made this inverted head and shoulder pattern, right? So if you see the left wing, the left shoulder is quite has a good strength. So many months of consolidation was there. And then if you see the right shoulder is quite weak, right? Quite weak, and it broke out. And gold and Dow, they both broke out together. But Dow Jones has divergence. It is coming down, and gold is moving up, right? So that is something which is a point to think, right? And on if you check on monthly averages, how are we performing? You will see a good markup. So you will see a divergence in RSI. So RSI, though Dow Jones has made new high, but RSI, it is just trying to twist and could not break the previous high on the resistance point. It's just getting weak. On a weekly structure, I've already showed you that the RSI is showing a divergence. It is moving down, right? So, okay, so this is the thing, right? And it's moving down. So we have a Lakshman Rekha in Dow Jones at 25,200 sorts, right? So if this breaks, okay, the first target stands out to be 23, the second stands to be 20,000, okay? And I don't know how serious is this. If this inverted head and shoulder moves negative, 14,000 for Dow Jones is something which, it can be kind of a strong sell, and then, picks up again. So for maybe kind of panicky situation. So that is too far to go. But yes, till the time the average. So first thing is that till the time this 26,000 is standing, okay, it's 26,200, 26,000 is standing, things are okay. And if it reverses back from here, I think things are in control. The moment it breaks this 26,000 and start trading below that, the first support is 25,500. That's where we have to think that we are standing on a brink, right? We are standing on a verge, and this can, actually move down. We should open our eyes there. Where are we standing? And if this international market, doesn't hold, there's a lot of bad shapes which this chart structures can make, right? So I have shown you the divergence in gold and Dow Jones, right? The Dow Jones is moving down, gold is moving up. So what we have to see is that these international markets should take the support. Okay. Okay. So coming back to India, this is the Nifty structure. So I've already shared this before that we were on the Elliott wave structure, and the fifth wave was somewhat ended here at this 11,800. We cooled down to somewhat 11,000, went back to this, and this move was something very fast. This was just before the budget, and this was a pre-budget rally, right, which happened, and that's where it started cooling on, right? But now, if we say that the major structure is that we have this Lakshman Rekha of 10,800 at the bottom, right? And we have touched 10,860 somewhat here, right? And if this Lakshman Rekha 10,815 breaks, and we close somewhat below the 10,770 or 760, there's a problem. There's a huge problem, and this system will collapse all of a sudden, and then there is no waiting. And you already have my bottom targets which I have given to you, right? So at this point, most of the people, most of the PMSs or institution to whom I speak, they are in a concept of I don't know why, but most of the people are expecting a bounce back from the market. Probably they are expecting a 300, 400 point move on upside. Why? It's all very simple. Whether they have not sold the material that they're holding in, or they are just talking about the emotions which they have. So I don't think personally that this move. I see that this move may consolidate, right? 100 points up, down, 100 points up and down. It might take a time, time consolidation and time correction, right? But I think this if this market really have to prove on upside, it is there is really necessary that this market should trade above, say, 11,150 or 80 zones. And if it is not correcting, it is not taking a move on upside with good volumes. I believe that this structure is pretty weak, and the way we have fallen from the top, there is someone who is selling in a hurry. And if you see these candles, it is really a worrisome factor with with these candles, right? So at every dip, every rise, somebody is selling. At every rise, somebody is selling, and that is how the first sell, which we have seen, that the first sell at 860, and we have made a kind of spinning bottom. So if I check on hourly candle, so Monday is one hope of expectation. I think I'll buy if I get a dip at 960. Okay. So Morningstar is the stop loss of, say, 897, and this should pull up. I mean, it should retest this of 11,117. I've already told you that 11 130 40 150 60 zones is a possibility, and then it will make a rounding cup kind of cup situation, and I expect a handle situation which should break down, not move up. Okay, so it might attempt of this Lakshman Rekha of 178 might try to attempt that, but if it is not holding on, just sell the things which you just try to bottom at this level. So probably Nifty is drifting more down, and it is could be a zone of, say, 10,567 to 600, right? And one thing more, that people are not selling. Why they're not selling, I have no idea, because maybe they have an expectation that a lot of correction has already happened, and market may not fall at this point. Then I have one reason to tell them that the distribution in mid caps already, it's been already, 1.5 to 2 years already. Things have been sold. Those who are waiting in a hope that these may bounce, they will sell down in panic. One more thing, that the market corrects only when there is a panic. I mean, people sell only when there is a panic in market. At present, in current situation, it is just someone who just want to exit. Maybe what FIs, or maybe FI pumped back someone who is just taking a face of it. But I understand that the 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 way market is corrected from 12,000 to 11,000, somebody wants to sell and he doesn't want to buy. He wants to sell at every rise, and he is eyeing some bigger correction, and then he will certainly like to buy whenever market moves back up. So as of now, there is no redemption pressure when I speak to PMSs, and people have started asking since August 1st. And if this trigger of redemption comes in, then is where domestic market will start selling. So DIs are still buying at this point. They're just acting as a savior. But if they come to sell, then market, there is no buyer in the market. So I think we should try to watch each and every figure displayed in the evening from DIs and FIIs. We need to track all these candles and where they are reversing, and backed by volumes. There is no hurry. I mean, market has just corrected 1,000 points from 6,700, moved to 12,000, just corrected 1,000 point, and there's lot of up and downs in between. But yes, consolidation is consolidation buying we have never seen. I mean, it was a large spike up, large spike down, 1,000 point move, big up and down. So that has happened in a very short period. So this is how market should never react. So before election 1,000 point up, after election 1,000 point down. So what the market is trying to show us, right? So I would have digested this, but since international market is not again supportive, so gold is has this diversification divergence. Gold is moving up and DJI is moving down. So I think I'm not able to digest this point, and there is 1 year left in uh, Trump's okay election, so probably 1 year more to go for there. So whether Trump will come or not, a lot of things are there. But the way Trump is acting, the way Trump is supporting on the Kashmir front, I mean, the Pakistan Prime Minister has recently made a visit in US. So Trump's want to intervene as a mediator to solve this Kashmir issue. We have seen the Amarnath Yatri and the other people, they're just informing them to go to their own home states. So I think a lot of crazy situations are happening. It is something which might surprise at any given point. So yes, I'm not a buyer. I am a buyer. I have my supports. I have my stop losses in place if I really want to try and I'm not telling anyone to really put their positions open in the market. Nobody knows, what is there at the back, and just stop listening to all those TV analysts. I mean, they have their own positions. They're not worried about what you have. So you need to track your own situations. You need to track your own stop losses. If you don't have your money management at this point in time, and you have not read the company's performance in real, so you are really going to burn your capital for sure. So just for this webinar, I would say that I really wanted to come. I didn't get time in last 2 weeks just because of my IPO running. So I think it's good. Yes, at this point, don't really rush to buy anything. Wait for right time, and if you really want to buy, trade in options. Okay, don't trade in future lots. Anything is correcting at any time. We have seen care rating correcting from 1600, standing at 400. What a crazy moment. So companies, how they performed in last 10, 20 years, that is one point, but it is a revolutionary market standing in this point. This government wants to change the structure. How it is still unclear. I mean, people are in favor, people are not in favor. Whosoever is making money from this government policies, they are supporting it. People who have voted for Modi, they've turned against at this point because maybe structure is not favoring them. So it is all about where are you standing, what structure you are in, and that's why people will, speak accordingly. So for us, is important to understand the situation. For us, it is important to understand the international market. For us, it is important to understand our pockets, right? Don't just jump in and just put in your money looking that this is the bottom. Don't listen what your friends are saying. Don't listen television. Just analyze that whether the stocks which you're holding are true or not, whether they have that base, whether the promoters are high in debt. If they are, so they might not be able to pay that. We had an example of CCD, a lot of pressures from private equity guys. So people are succumbed to pressure at this point, and I think whosoever takes the pressure is not the winner. Whosoever is in a good condition, maybe, right? Whosoever is in a condition to pay back, whosoever is in a condition to whosoever is in a condition to actually understand this particular environment, whatsoever is happening, and who stands in this environment, right? Looking at their uh, market situations, so they are the winner, right? So my message is clear. Nifty might move up some 100 point, 200 points. So our Lakshman Rekha stand at 11,178. If it is not moving up, it is making an hourly reversals. We are again a seller in the market, right? So just not in a hurry. This was the Nifty, which I said I've already discussed the levels. Just be there. Freeze that in mind. If it breaks, it is a big problem. And Bank Nifty is again, it seems as if Bank Nifty is in more hurry to correct, and the way Bank Nifty has fallen from 32,000 levels. So that was a fifth wave ended here, and it could not move the previous high, and that's where the selling is. So we are standing at, as of now, a short-term support. The gap is filled. There's a gap here. It got filled, and it has made a daily dodgy formation. It shows that the markets are currently in an oversold zone, and they want to spend some time at this point. Might be some reversal, but if it is not happening, it's a big crazy trap, and people will be forced to sell in the market, because if you say weekly structure, there's a damn situation, it can sell down. Remember one thing, a lot of people do play on RSIs and MA series, right? I'll tell you, the fact that, I've seen over the last 18 years, I've seen that, RSI can remain in an oversold zone for maybe a month or 15 days if the correction is something big, right? So we have a weekly, I want this weekly to touch the base, uh, wherein I can see this point as a reversal point, right? So there is a lot of room in weekly, and if it's a monthly, again there is a lot of room, right? So it has just started on a monthly structure. You can see at the top it's so overheated, right? And the first display here of a selling starts, and on a monthly structure we already have in Bank Nifty an evening star formation, which I have taught you. A lot of people are student, and they have taken my classes. So probably this area is an evening star structure, and you all know that in this evening star structure has a strength when it makes on a monthly move, right? So it's a perfect evening star structure. You can see that this point is low, this point is high, this point is here low, this point is high, mid candle. So it is not actually, it could not actually, hit the previous average of 29,000, which, it should, but somewhat, the situation didn't allow this market to stand, and it is now tilting down. So probably if this market, falls back on 27,300, Bank Nifty indices, it falls back on 27,300 and doesn't hold, there is a sharp sell in this. So you will certainly ask, sir, what is your target in Bank Nifty? So for me, the target on Bank Nifty is somewhere around, say, 21,500 or 600. It sounds very crazy standing at this point, but I am not bullish. This is for sure. I am bearish, but I am with the market, right? At current situation, if I understand, the world indices doesn't allow me to be bullish, but I want to really be with the structure. If I'm buying, I will certainly buy with a stop loss, because I know the bottom is big, and at current situation, when there is a tightening in liquidity, stocks will not move up. This is for sure. You need performance, you need margins, you need growth. And when there is a lack of growth, you cannot sustain at the multiple of 27, 28, which is Nifty is currently in. So it needs a correction. Okay, crude is good to be in a structural move. So I think current situation, it may correct more, and so this is how it should work on the channel. So when we say DJI will come down, so you don't expect crude to move up. So this structure is again a weak structure. You can see this as a rounding bottom, and if this crude breaks this time, the support zones, say $50, it will crack bigger. So we will really take a bigger move on crude. So the structure will be bigger. So if the structure is bigger, we will take a larger support zones. So if it is correcting, I think the bottom should be around 31. It may actually break the previous low also. So for me, at present, the crude has, currently it is trading in a good positive format, rounding up and a handle situation, and we are just waiting that if it doesn't actually hold, if there are crude lovers listening to me, right? We want this symmetrical formation to break down. If it breaks down, it's a very good short, and don't cover till it comes down to say sub 30 levels, or it would breaks 20, 23, $24. So people are saying, I mean, as per chart structure, it is currently in a bullish format, but if it doesn't hold this move, so it is a wall of worry. So this should happen next month anytime. I think this month is going to be consolidation month. So next month, crude may try to break previous high or something, some move which will break this 61. So probably another $6-7 on upside. It is going to be fake one, and if that doesn't hold on, it's a good shot. Take your $5 stop loss and stay into the system. Okay, so I'll discuss few stocks when a lot of people